Hi, this is Randy Finney with Right Side of the Chart, and this is a market wrap for Tuesday, October 16th, 2018. Big day today, especially on the Qs, up almost 3%, and we actually built on those gains after the close. I want to get to those charts in a second. But here's what's happened today. So far, they've defended the key levels up. We'll get to the weekly charts in a second, but that's what happened. We dipped below some key trend lines last week, and today was technically significant. Yesterday, I gave a check mark to the Bears because they couldn't follow through, but today certainly give that to the Bulls. There's nothing you can take from them. But as I've been saying, keep in mind this is what happens when volatility expands. You get these big green candles, and as impressive as this was a trend day where prices went up mostly throughout the day and closed, parked near the close, and we even built on that after. But you know what? Last Wednesday was a trend day too, and you can see this candle is engulfed by this one. Now that's not a bearish engulfing. It didn't come after this one, but I mean size-wise, this is half that candle, and it's just smack in the middle. And so what it's done, it's brought us up now to that big old 178 level. I didn't think we'd get there this fast, or if we'd get there at all. Really wasn't sure about that, but that is resistance. There's also, I left these fib lines up. This chart's busy, but this is a Fibonacci retracement line from the highs down to the recent lows, and you can just make out that dotted line right there, right at 178 comes in with that 61.8 Fibonacci retracement. What does that mean? Well, it doesn't mean anything definitively, but it does mean if this is just a counter trend bounce, with more to come, then that's right in the range. Typical counter trend bounces will often go between the 38.2% Fibonacci retracement all the way up to the 61.8 that I just showed you. So that's what it is as of now. And again, the impulsive nature of it, was technically driven. If you recall, recently, last couple of days, I've highlighted this on this 15-minute chart. Let me pull up futures 15-minute chart right here. NQ. We had this ascending triangle pattern. And that's the lower line. I had to slightly revise that from yesterday. That was the top of the pattern with a minor level right there, a little bit above. So we broke to the upside of that. And I think I covered this in yesterday's video for public members. I forget. I do updates on the site for members as well. And I know I did an update on the markets this morning. But the measured target, you just take the widest part of the pattern and you add that to where it breaks out, and that gives you your measured target, which I mentioned could come up to here. So there's certainly some more upside for either counter trend bounce or again, if this is just another great buying op on the way to new highs. And like I said earlier, I said it in today's video, even if we make new highs anytime soon, we're still going to have a big divergent high. We're just going to extend the divergences. So whether you want to chase this rally or not. If you position long, and I've said it many times, they were going long at support with a stop back below, and I'm talking the weekly trend lines. I'll get to the weekly charts in a second. Was objective, and you can continue to trail stops up if that's what you're doing. This was also a resistance level. I'm sorry, support level right here that was defended on NQ. So bigger picture, there it is, the divergent high, the breakdown, and the $1 million question. And after today, like I said, you just have to see this rally faded. Although I still think there's a good chance it gets faded, you have to see today's rally get faded. In other words, this today's breakout fail. We move back below what I just showed you here, really the top of this range here. And more importantly, this trend line. This is still a valid trend line to watch. So on a pullback. Now, if that comes in at a higher level, in other words, if we continue to rally this week and then we pull back later on and hit it here, well, there's a buying op right there. But if we come back down, take out the top of this trading range right here, and break also below that trend line, that I believe will open the door for a quick flush down. And for members on the site, I posted today some targets if that scenario happens. And I said I'm not going to add that as an official trade idea yet, the QQQ short, because we need to see we're still above. Most important thing right now in the markets is, let me grab something here, is this. And you go to these weekly charts on SPY and QQQ, and so far this can certainly change, but right now it's just a successful defense of two very important long-term support levels. This long-term uptrend line off the 2015 lows, as well as a 40-week moving average, which come in perfectly together. Both were tested with a little undercut last week to park it right back above there. And so far today, another kiss of that level. If you look at this week's candle, the low right there from yesterday, perfect kiss of the 200-day. So a second test. But these are weekly candles. Anything can and will happen by the end of the week. We're either going to build on this. We could still park right on it, but from my experience, when you usually have, if you limp down to these key levels, you can trade on them for a while. But when you have a quick move down, a sharp move like you had right here and right here, you kiss those levels and you rally and you rock it from there. So that's it. We'll see what this week holds. If we fail, if we can only pop a little bit more in reverse and stay below some of these resistance levels, the door is still open for another sharp move down. And at this point in time, I'm still leaning slightly that way despite today's big gains. Yeah, but to just make clear, support is support until unless broken. So far, well, this week's not over, so you can't say we have a successful weekly. We have one weekly defense of that trend line. There's 1, 2, 3, 4, 5, 6, 7, 8 so far. And if we close above it, that'll be 9 this week. It helps to validate that trend line. But once those trend lines go, like I say, on a weekly basis, you usually get a waterfall type sell-off, and that's what I would expect if this one goes. And if not, then we could rally here for, well, at least this week, maybe for a few more weeks. And again, the potential is certainly there in the charts. These divergences on SPY and QQQ are so steep that we can push up, just like we had on QQQ, we had a little divergent high back on that drop back here. You can see it real small right there, that one. And we pushed up, which I at the time said was possible to go and make another divergent high, and we'll do them. We'll keep trading those. So stay on your toes is all I'm trying to say. This week is not over, and we haven't really gone to levels, as far as retracements go and resistance. And let me show you one chart I really love. This is the NQ 60-minute chart. I was showing you another one, a different charting platform. This is one's from Interactive Brokers. And I got away from using this one for a while. I had this one annotated. If you're new to the site or my analysis on the YouTube channel, this trend line goes to the left of the chart. I think back to yeah, maybe April lows. Lots of reaction. We were watching this. This broke down. So you had a breakdown in the NQ in the Nasdaq 100. Remember, these are Nasdaq 100 futures, and we had weeks of back testing it, but we stayed below it, and it was a back test. And at the time, I said we need to see a SPY breakdown, and also set up this minor uptrend line that gave us this wedge, and we had perfect sell signal. Both SPY and NQ broke down in close proximity there. That triggered this sell-off. So now where am I going with this is 73.44. I haven't touched this line. It's been there for a while. It was support, and it may even go to the left of this chart. We briefly dipped below, but we regained it there impulsively. And a couple more defenses of that level there. Defense, brief snap down below, tested it again, and then once it became clear that level couldn't hold, we tapped on a lot, boom, that's where the waterfall selling started. So this is a very significant level, and above there, I can tell you this little resistance zone, these two lines in close proximity are certainly levels to watch as well. So there is a lot of resistance overhead, and that's, I guess, is the theme of this video. Despite today, the very bullish day, this is a massive amount of overhead supply because the NQ, especially the Nasdaq 100, slogged around sideways for a while, putting in this big, what still appears to be a possible topping, pattern there, and we've kicked back right now to it. So as far as shorting ops go, look, today again, you have to give it to the bulls. We're still above that level, so any shorts are aggressive, and they continue to be unless we see those weekly levels go. But I pointed out some objective levels today; they didn't hold, and but that doesn't make this level not objective at all. So you short resistance if that's your thing, and with a stop not too far above. And again, if you're long and you took any positions anywhere in here, or especially on the breakout of that ascending triangle pattern today, then you're good. You just set your stops at break even right now to at least assure that you won't lose anything on the trade, and or trail it up in case there happens to be more juice. I know it's earnings season, everybody's excited. Netflix is up after the bell. That's still an active trade on the site. I'll speak to that tomorrow for members. We're still we might be back to break even on it. Let's see, 386.81. Well, I'll address that later. Uh, And then I wanted to show you ES as well. ES, which is the S&P 500 E-mini futures, you had a very well-defined level, very significant level. This one's giving me pause as well because S&P, and I'll show you it as well in SPY in a minute for you SPY traders, right about 2796, call it 2800. It was a very important support level. It was broken with impulsive selling. It was back tested right there. We failed. Now we've regained that level. Yes, you can see I have another resistance level overhead and then a big shelf here. This was really, the SPY and QQQ had two different animals in recent months. QQQ started going down earlier, having weakness. It was at first just on the FANG stocks, and some tech stocks that were just hanging in there. Then tech started rolling over, and then the rest of the market, the S&P followed. But this was really the topping pattern, if you will, or at least a consolidation range. You can't, well, only time will tell if it's a topping pattern in SPY or ES. So that's about the uppermost bounce target. I mean, obviously, if we get above there, much above there, we've taken that back. It's a pretty significant support, former support shelf, now resistance, and that's again about 2870 or so. And we get above there, that'll open the door for new highs, and we'll probably have that scenario. But up until then, here's your resistance levels, and watch what happens. Pull back after a strong day like today is pretty likely. But you're going to also see, remember, strap in and hold on because it's earnings season. So you're going to see some companies meet, some companies miss expectations, and some will blow it out of the water. So you're going to have a lot of volatility, especially that leads to opening gaps because what happens is the market closes at 4. Most of the bigger companies report after the bell, some before the bell, but you're going to get those. They lead to opening gaps the next day. So there's ES. Those are the levels to watch. And let's see what. And of course, let's take a look at SPY. This is the broad market, the stock market. So I have this long-term uptrend line comes off the March 2009 lows right there. So this is our bull market uptrend line. And depending on how I draw it, you can play around. You can. This is my preferred draw right here. Preferred draw because we're going all the way back, and I have to go a little bit to the left of this chart here to see there's some March 2009 lows. I have the most reactions on both candlestick bodies and or the shadows, those skinny parts of tails down below. Now I can take that line, I can certainly lower it here a bit and capture just these candlestick shadows right there. I give up some of the other ones, and we'll call that the benefit of the doubt trend line. So SPY is still, for all intents and purposes, it has also successfully defended the long-term bull market uptrend line support and that 40-week moving average. You can't even see it under there, just like QQQ, because they're so tightly weaved. They're overlaid right now. But you can see last week, remember we dipped down below it, parked it right on there, right on that 40-week moving average within 1 penny. And this week so far we're above it. So yeah, if this can go either way, but if you want an objective short entry, you're going to have to see us go back down. And now that we've already tested it, let me say this, successfully last week and so far this week again, any intra-week breakdown below, probably, my guess is just below yesterday's lows, will probably do the trick. I also mentioned this on the site today. We had what appeared to be, here, let me give you a cleaner board here, what appeared to be a potential bear flag pattern. First, it would look like a pennant right here with this and this. Let me draw these for you here. Yeah, that line and this line. Now, this one moved up. So It's a little stretch. I'm going to have to say that. It's a little too stretched for my taste now. This morning it was okay. And I'm referring to, I mentioned this bear flag right here last week, and it was a small one. It played out and then some. But now, if you look at the bigger picture, and again, that's just a little too big for the symmetry that I like to see on a bear flag. But it is a consolidation area, and a breakdown there could really bring in something like this and then take us down, like I've been talking about for a while, to those lows back from earlier in the year on both SPY and QQQ. So there's your scenarios. And again, there's not a lot of upside room for the SPY to go to keep that bearish scenario alive. I mean, anything can happen, but ideally, you want to see, and here's SPY on the 60-minute chart, an hourly chart. Let me give it to you on 2-hour chart, and that'll show it. Well, we can go back to the 60-minute chart at 279.50 level. We overshot it today, and I talk about that. I use the term momentum fueled overshoots a lot. There was a lot of velocity. Today was a strong day. It was a trend day, and so it is possible that this was just an overshoot at the end, and the market's closed and will settle there or move back down there below that level tomorrow. So I guess what I'm trying to say here, that is a pretty significant former support, now resistance level. I would be very surprised if we sliced through it like it wasn't there. Yes, we went through it today, but just by a little bit. I mean, here's my line's at 279.50. We closed at 280.30. So that's technically, for all intents and purposes, on a $280 share price, that's right on the level. And I even said that in the trading room before the close today. We would probably fade it right before the close, the rally, which they did see, and park it right back about on that resistance level. So there it is. That easiest way to say that is we rallied up to resistance today. And if we continue on up, or we build on today's gains, that would certainly be bullish. Here's a trend line on the SPY that broke. We had that first trend line break there, secondary trend line, and these are all your levels. Here's that 279.50 again. So that's the way I see it, guys. Lots of overhead supply. You can't take anything away from the bulls today, but then again, like I pointed out in the beginning of the video, today's trend day was half of what last week's trend day to the downside was. So this is like a big fight between two heavyweights where they're sluggers and they're just slugging it out, exchanging blows, bull versus bear, and that's what we're seeing here. So we'll wait and see what happens this week. I think it'll be interesting, and the only thing is expect the unexpected. That can be, some more sharp days to the upside. But I favor that, especially after that run today. We'll probably pull back a little bit tomorrow, and we could, at any point, and it could be earnings induced or not, we could start moving down. If we do, just watch those levels. Like I said, right now the market has no business taking out the recent lows after the successful tests that it had. It may want to test them again, but to undercut those lows by more than just a brief amount, and I'd still like to see that divergent low I was talking about there, to really position long for a swing trade that could take us to new highs. If we got that, that's what I saw, and I pointed out on the website on the two drops earlier this year on both QQQ and SPY, back here and here. Was short going in and identified the tops and went long on both bottoms. And because you can check on the site, bullish divergences on the 15 to 60-minute charts, and I like to see those to really have confidence to go into some swing trades lasting more than just a few days. Right now, this is still a day trader's market, but yeah, could morph into more. We're going to wrap it up here. I think I covered everything I wanted to, and if I see anything else, I'll post it on the site. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.